Now I wish to start with one sum on partnership accounts. Observe the sum on the screen. First I will read the sum. Then I shall mention the steps for the purpose of solving the sum. Then I shall solve the sum. Narendra, Bhupendra and Rajendra are partners, sharing profits and losses in the proportion of 5:3:2. On 1/4/2004, their total capital is 3 lakhs, which is in the profit sharing ratio. So their profit sharing ratio is 5:3:2 and total capital 3 lakhs is also in the ratio of 5:3:2. On this date, the balance of their current accounts were 9,000 credit, 6,000 credit and 15,000 debit respectively. So you are given the credit balance for 2 partners and debit balance for the 3rd partner. Narendra has withdrawn 18,000 while Bhupendra's drawings were 12,000. Interest on drawings is to be calculated for an average period of 6 months. So you are given the details of drawings and interest on drawings is to be calculated for an average period of 6 months because we are not given the dates on which amount has been drawn by the partners. According to the partnership deed, interest on capital at 10% per annum and on opening balance of current account at 12% per annum is to be calculated. Interest on drawings is to be calculated at the rate of 10% per annum. Second point, 25% of the profit after giving effect of interest on capital, interest on current accounts and interest on drawings is to be transferred to development reserve, which should be maximum rupees 6,000. So first you have to give the effect of interest on capital, interest on current account, interest on drawings. From the net profit as per profit and loss account, give the effect of these 3 adjustments, which are 1. Interest on capital, interest on current capital balance, interest on drawings. After that, whatever the profit available, work out 25% thereof. That 25% should not be more than 6,000 rupees. If it is more than 6,000 rupees, then 6,000 rupees will be transferred to development reserve. But if that 25% worked out is less than 6,000, then the amount that you have worked out, which is less than 6,000, will be transferred to development reserve. Now I consider the next point. Rajendra is to be paid 10% commission on a profit in excess of 15,000 after giving effect for above adjustment. Now we have transferred to development reserve. After that, whatever the profit is left, find it out. Find out that profit and how much it exceeds 15,000. Amount exceeding 15,000 is a principal sum available for calculation of commission. Commission is to be given at the rate of 10%. So first give the effect of interest on capital, interest on current balance of capital accounts, interest on drawings. Find out the profit. Work out 25% thereof. It should not exceed 6,000. In light of that, transfer the amount to development reserve. After that, development reserve, work out the profit once again. And that balance, how much it is in excess of 15,000. That is the amount on which you have to apply 10% rate of commission. And that much commission will be paid to a partner. Now commission is paid. Next. It is guaranteed that Narendra it is guaranteed by Narendra that Rajendra should get at least 6,000 by way of commission. Now we have calculated the commission as per point number 3. How? Profit available after development reserve. Deduct there from 15,000. You get the profit, multiply with 10%. Now that commission should be minimum 6,000 rupees. If it is less than 6,000, then the difference between the 6,000 and that commission will be paid by Narendra to Rajendra. Will be paid by Narendra to Rajendra because it is a guarantee given by Narendra to Rajendra. So whatever the commission is there, if it is more than 6,000, then there is no liability for Narendra. But if it is less than 6,000, the deficit is to be paid by Narendra to Rajendra. For that deficit, Narendra is to pay and Rajendra is to get. So Rajendra's capital account is credited and Narendra's capital account is debited for that difference. That is one way to write. The another way, whatever the commission that works out at the rate of 10%, which is less than 6,000, debit it to profit and loss appropriation account and give that commission to Rajendra. Then find the divisible profit of the firm. That divisible profit should be distributed in the ratio of profit sharing. Now, after distributing the profit in that fashion, the guaranteed deficit should be deducted from the profit share of Narendra and it will be added to the share of profit of Rajendra. That is an alternative accounting treatment. Now, after explaining all these things, let me go to the next point. Profit of the firm after deducting interest on drawings for the year ended on 31st May 2005 was 90,000. Now see, this profit is given to you after deducting interest on the profit is after crediting interest on drawings, not deducting, after crediting. So whatever the interest on drawing is credited to profit and loss appropriation account. So net profit plus interest on drawings, that total works out to be 90,000. So this 90,000 includes two elements: net profit as per profit and loss account and interest on drawings. That is also another important point to be noticed by. How that gets reported in the profit and loss appropriation account, that I shall demonstrate while solving the sum. On the basis of above particulars, prepare profit and loss appropriation account of the firm and current accounts and capital accounts of the partners. Now, what are the steps for the purpose of solving the sum? Let us work it out. Write the balances. 90,000 is the balance that gets recorded to the credit side of profit and loss appropriation account. Then write the capital balances, fixed capital account and current capital account balances. Then consider the adjustments, identify the adjustments. Interest on capital, interest on current account and interest on drawings is the first adjustment. Transfer to development reserve is the second adjustment. Then commission on a profit in excess of 15,000 is the next adjustment. When you work out commission, consider the guarantee points as given in pair 4. Distribute the divisible profit. Also mention necessary calculations that you do while solving the sum. So these are the steps that I have suggested. You are not a teacher, so you need not write these steps in examination hall. This I have given for your better understanding. Now, let me start with the sum. This is my profit and loss appropriation account. This is partner's capital account. This is current capital account. I will start as I have mentioned. First of all, I will write down the balances. Now notice the style of writing 90,000. Net profit from profit and loss account 90,000. But this includes interest on drawings. So I have kept a space above 90,000 to write that interest on drawings. Notice it. And in light of this, I will consider first of all interest on drawings, that too in priority. Narendra has withdrawn 18,000. Narendra's capital account debit, current capital account debit 18,000. While drawings of Upendra 12,000 debited to B's current capital account. Interest on drawing gets calculated for an average period of 6 months. That too, at what rate of interest? 10%. So let me work out. 18,000 into 10% into 6 by 12. That works out to 900. Interest on drawing is debited to current capital account and is credited to profit and loss appropriation account before 90,000. Interest on Upendra's drawings 12,000 into 10% into 6 by 12. 600. Bhupendra's current capital account debit to profit and loss appropriation account credit. See, this 1500 is the interest on drawings is added to our net profit as per profit and loss account. After that we got the number 90,000. So what was the profit as per profit and loss account was 90,000 minus 1,500, 88,500. So 88,500 plus 1,500. This is either write 88,500 plus 1,500 that you find in the square, or alternatively write straight away 90,000. Then don't write these things. You have an option to write an examination. What is the first option? Write 88,500 and 1,500 as you observe on the screen in a square. In that situation, don't write this 90,000. Or write this 90,000. In that situation, don't write this 88,500 and 1,500. But being a teacher, I wanted to mention both the options available to you. I have demonstrated in this fashion. You are not supposed to write in this fashion in the examination if at all asked, right? Or go for only one option. Now, another important point, that I am given the balance of current accounts. It is presumed that those balance of current account is without considering the interest on drawings. That's a presumption with which this sum is solved. Now I consider the next. Now I want to write down the capital balance. Read it, total capital of the firm is 3 lakhs, that is in the ratio of profit sharing. So let me work out 3 lakhs into 5 by 10. 1,50,000 is the fixed capital of Narendra. That is recorded in the fixed capital account of Narendra, 1,50,000, balance brought forward. Now let me work out for Bhupendra. 3 lakhs into 3 by 10. That works out to 90,000. Credited to Bhupendra's fixed capital account. Balance brought forward is a narration. Now let me work out the capital balance for Rajendra. 3 lakhs into 2 by 10. That I record to the credit side of Rajendra's capital account as balance brought forward. Observe it. Now I will consider the current capital balance. Narendra's current capital balance is 9,000, credit balance recorded on the credit side. Balance brought forward. For Bhupendra it is 6,000, that is recorded on the credit side of Bhupendra's current capital account. While in case of Rajendra there is a debit balance that gets recorded to the debit side of current capital account of Rajendra, that's 15,000. After writing the balances, I'll consider the adjustments. Interest on capital account and current capital accounts. Interest on capital account is to be calculated at the rate of 10% and that too on current accounts at the rate of 12%. Let us work it out and give its effect. Interest on Narendra's capital, 1,50,000 into 10%, 15,000. Narendra's current capital account credit and profit and loss appropriation account is debited with 15,000. Now let us work out the interest on capital for Bhupendra. 90,000 into 10%, 9,000. Bhupendra's current capital account credit, profit and loss appropriation account debit. Same way, for Rajendra it gets worked out 60,000 into 10%, 6,000. Credited to Rajendra's current capital account and debited to profit and loss appropriation account. Profit and loss appropriation account is debited with 30,000 and current capital account has been credited with the respective share. Now, next adjustment. Interest on current capital balance. That is to be worked out at the rate of 12%, 9,000 into 12%, 1080. Current capital account is credited and profit and loss appropriation account is debited with 1080. So 1080 is debited to profit and loss appropriation account and it has been credited to the Narendra's current capital account. Now let us work out for Bhupendra, that too at the rate of 12%. 6,000 into 12%, 720. Profit and loss appropriation account debit 720. 2. Bhupendra's current capital account debit 720. Rajendra has a debit balance of 15,000 and 15,000 we have to work out. Interest at the rate of 12% and that will be debited to the current capital account and shall be credited to the profit and loss appropriation account. Let us work it out. 15,000 into 12%, that works out to 1,800. Rajendra's current capital account debit, profit and loss appropriation account credit. This is how two effects are given on interest on debit balance of Rajendra. I have considered the interest adjustments. Now next, adjustment for transfer to development reserve. 25% of the profit after giving effect of these adjustments. But the maximum amount that should be transferred is 6,000. So let us work out the profit available to calculate 25%. That is to be compared with 6,000. And maximum amount that you can transfer to development reserve is 6,000. Let us work it out. Observe it. Total of credit side is 91,800 minus 31,800. That works out to 60,000. Profit worked out after giving the effect of above adjustments. That is what? Interest on capital, interest on drawings, interest on current capital balance. Now on this 60,000, apply 25%. So 25% of 60,000 amounts to 15,000. But the transfer to development reserve is limited to 6,000 because the maximum amount that could be transferred is 6,000. So 6,000 is less than 15,000. So 6,000 will be transferred to development reserve. Profit and loss appropriation account debit to development reserve account credit 6,000, and this development reserve appears on the balance sheet liability side. When you prepare final accounts, if at all this adjustment is there, the second effect is on the balance sheet liability side. Now, next, divisible profit for commission calculation. 60,000 minus 6,000, 54,000 is the profit available. Now this profit available 54,000. That profit is how much in excess of 15,000? So 54,000 minus 15,000 is the available sum to which 10% proportion is to be applied. Let us do that. Rajendra is to be paid 10% on a profit in excess of 15,000 after giving effect of above adjustment. So adjustment effects are given. We worked out the profit to be 54,000. How much is the difference between 54,000 minus 15,000? Let us work it out. That amounts to 39,000. Now 10% of 39,000. 3,900 is a commission agreed by a firm. That firm will pay 3,900 as commission to Rajendra. But one of the partner, Narendra, has said that no, you should get minimum commission of 6,000. So 3,900 is a commission given by the firm. Now the difference between 6,000 and 3,900, 2,100, that commission will be paid by Narendra to Rajendra. Because it is a promise of Narendra, so Narendra has to bear the consequences of his promise. So 2,100 will be debited. This is a one accounting treatment. 2,100 will be debited to Narendra's capital account and it will be credited to Rajendra's capital account. Or if you don't want to give that accounting treatment, give 3,900 commission from profit and loss appropriation account. Find out the divisible profit. Distribute the divisible profit in the profit sharing ratio. And from that, from share of Narendra, deduct 2,100 and in share of Rajendra add 2,100. This is how the guarantee adjustment can be accounted for. I will demonstrate both the ways. Observe it. But the Rajendra has assured rupees 6,000 as commission by Narendra. Therefore, Narendra will give the excess. So amount payable by Narendra is 2,100. The transfer entry for that is Narendra's capital account debit 2,100 to Rajendra's capital account debit 2,100. So 3,900 is commission paid by the firm. Profit and loss appropriation account debit to Rajendra's current capital account, and for 2,100, Narendra's capital account debit to Rajendra's capital account credit. This is one accounting treatment. Now I want to demonstrate the alternative accounting treatment. In alternative accounting treatment, what I will do, instead of writing this transfer entry, so if you want to go for an alternative accounting treatment, don't write this transfer entry of 2,100. So, see, observe, 2100 I have recorded. I want to show you the alternative accounting treatment. So I rub it out, I remove it, observe it. I will ask you to observe 2 times. See, 2100 and 2100 is removed from the capital accounts. See, I brought it once again. 2100 and 2100 I brought it. I want to remove it because I want to give the alternative accounting treatment. In the alternative accounting treatment, I should remove the effect of first alternative. So I remove it. Now I start with the second accounting treatment. Observe it. Now the profit available after giving all these things. 50,100 is the profit available. How 50,100 is obtained? From 54,000, 3,900 commission payable by the firm is deducted. So 54,000 minus 3,900, 50,100 is a divisible profit. That will be distributed in the profit sharing ratio. Share of Narendra 5 by 10. Now from this 25,050 I will deduct 2,100, that is promise given by Narendra. And the balance profit will be transferred to the capital account of Narendra. Now, I want to work out the share of Bhupendra, that is 3 by 10, that is debited to profit and loss appropriation account, and it will be credited to the capital account of Bhupendra. Now I want to work out the share of Rajendra 50,100 into 2 by 10, 10,020, in which I will add 2,100, that is profit transferred by Narendra to Rajendra. So from share of Narendra I have deducted 2,100 that you observe. Now I add same 2,100 to the profit of Rajendra. So Rajendra gets 12,120. Now here the adjustment effect of 2,100 is given to the share in profit of Narendra and Rajendra. From share of Narendra it was deducted. From share of Rajendra it was added. This is what we do in alternative accounting treatment. Now this profit will be credited to the capital accounts. Now I want to find out the balance of fixed capital account. They will be same 1,50,000, 90,000 and 60,000. That becomes opening balance for the next period. Now I want to work out the capital balance of current account. Observe it. Total of credit side of Narendra is 48,030. From that deduct 18,900. You will get the balance 29,130. Now I want to work out the balance of Bhupendra. Total of credit side is 30,750. Deduct there from 12,600. So 18,150. For Rajendra, total of credit side is 22,020. Deduct 16,800. You get a balance of 5,220. That becomes the opening balance for the next period. So this is the opening balance for the next period. I have tried to explain this sum in detail. It's a very nice sum. I feel that you must have followed this sum. Even if you find it difficult, repeat the sum once again. I am sure that you will understand. Thanks to all of you.